Recently, the Mexican peso has demonstrated remarkable strength against the US dollar, catching the attention of economists and investors worldwide. In fact, the peso is now nearly 17% stronger compared to a year ago. Today, we will analyze the factors contributing to the super peso. Please stick to the end of the video to find out if this trend will continue. Before we dive into the details, let's first understand the causes behind currency fluctuations. A currency's rise or decline can be attributed to various factors. Firstly, the country's economic health, including economic growth, inflation, foreign investment, and exports contribute significantly to a currency's strength. Secondly, the state of a government's finances, including its deficit and external debts, affects the perception of its currency's value. Thirdly, the monetary policies implemented by the central bank can influence the currency's value. There are other factors such as political stability and policies. These factors are in many times interconnected. Economic strength. Taking a historical perspective, the Mexican peso has experienced notable declines over the past 2 decades, each with specific underlying reasons. The first decline, starting in 2002, coincided with China's entry into the World Trade Organization. During this period, the U.S. share of Mexican imports decreased, leading to a sustained depreciation of the peso. The second episode, beginning in late 2014, was associated with the drop in oil prices, a rise in Mexico's public debt, and a deterioration in the U.S.-Mexico trade relationship. This resulted in a sharper depreciation of the peso. Similar sharp declines in the peso were observed during the global financial crisis and the U.S. recession. These periods often coincided with significant shifts in trade patterns between Mexico and its largest trading partner, the U.S., which accounts for over 80% of Mexico's exports. However, in recent years, Mexico has experienced significant macroeconomic shift, particularly with the nearshoring or friendshoring trend in global trade. As companies reevaluate their supply chains and seek to diversify their manufacturing locations away from China, Mexico has emerged as an attractive option due to its proximity to the United States. Furthermore, the United States-Mexico-Canada Agreement, in effect since July 2020, has secured favorable trade terms with the U.S. Mexico also has free trade agreements with 48 other jurisdictions, including the European Union and the Pacific Alliance, as well as 32 investment protection treaties, including those with Argentina and Brazil. This trend, driven by factors such as rising labor costs in China and geopolitical uncertainties, has led to increased investment and trade opportunities for Mexico. In the first quarter of this year alone, foreign direct investment in Mexico reached $18.6 billion, representing a 48% increase from the previous year. Notable companies like BMW are investing over $860 million to expand their electric vehicle production in Mexico, and Tesla plans to construct a factory in Monterrey with an estimated investment of approximately $10 billion and the potential to employ thousands of workers. The Mexican peso has benefited from this shifting trade pattern, and it appears that this trend will continue in the near future. Fiscal policy. Mexico's government has been smartly handling its finances to control public debt and maintain fiscal discipline. This responsible approach gives investors peace of mind and strengthens the overall economy, creating a favorable environment for the Mexican peso's strength. The country manages its public finances competently, keeping its net public debt at around 50% of GDP, which is relatively lower compared to other countries around the world. What sets Mexico apart from other emerging economies is its investment-grade status. This means that it's considered a safe place for investors to put their money. This reputation is thanks to Mexico's strict fiscal policies and having a credible and independent central bank. The strength of the Mexican peso is proof that the country has solid macroeconomic policies. The government's commitment to budget austerity and avoiding new debt has contributed to the peso's stability and attractiveness. In a nutshell, Mexico's financial decisions and dedication to building a strong economic foundation are key factors behind the peso's strength. This not only benefits the country, but also makes it an appealing choice for investors. Stable inflation and monetary policy. The monetary policy in Mexico is effective and reliable. The country's central bank, Banco de Mexico, has taken proactive measures to address inflationary pressures. In the first half of 2021, Mexico initiated a series of interest rate hikes in response to rising inflation. Throughout 2022, inflation remained high, reaching an annual rate of 7.8%. As a result, the interest rate reached 11.25% after Mexico's most recent rate increase in March 2023. However, positive indicators in 2023 suggest a potential pause in the rate hike cycle. It is projected that inflation will gradually decrease and approach the target of 3% by the end of 2024. The efforts of Mexico have contributed to maintaining stable inflation rates in Mexico. The implementation of prudent monetary policies has effectively controlled inflationary pressures. This stability not only boosts investor confidence, but also enhances the appeal of the Mexican peso as a currency for international trade and investment. Mexican peso is an attractive carry trade currency. The Mexican peso is an attractive option for carry trade strategies. Carry trades involve borrowing in lower-yielding currencies and investing in those that offer higher yields. Recent indications of a slowing U.S. economy and the likelihood of U.S. interest rate reaching their peak have reignited interest in carry trades. As the U.S. Federal Reserve approaches the end of its tightening cycle, with U.S. interest rates expected to stabilize, investors are enticed to return to high-carry currencies in emerging markets. The Mexico Central Bank initiated interest rate hikes as early as 2021, eventually raising the rate to its current level of 11.25%. This substantial interest rate premium over the U.S. rate provides a significant buffer to counter potential weakness in the Mexican peso. The prevailing scenario foresees a mild recession in the U.S. in the near future, accompanied by a range-bound U.S. dollar. This outlook supports the Mexico peso's strength, as proactive central banks and relatively high real interest rates work in its favor. Political risk. In addition to economic risks, political risk also remains a factor to keep an eye on. Andrés Manuel López Obrador, popularly known as AMLO, assumed the presidency of Mexico in 2018, enjoying significant initial popularity. Although his support levels have slightly decreased over time, he has managed to maintain a strong backing from his followers. However, political risk remains a factor to consider. The current administration has placed a strong emphasis on domestic priorities and increasing the government's role in the economy. Several large-scale projects have been canceled through public referendums, including the $13 billion Mexico City Airport and a $1.4 billion brewery project in Baja California. Moreover, the government has implemented a ban on worker outsourcing, a common practice in sectors that require temporary labor. The resulting legal uncertainty surrounding these reforms may continue, potentially impacting investor sentiment. It is crucial for investors to closely monitor these risks. Nevertheless, considering the overall positive trends and factors, the super peso is expected to persist in the medium term. I would like to invite you to share your thoughts on the Mexican peso in the comments section below, and don't forget to subscribe to the channel. Thank you for watching.